Happy New Year, everyone. I know it's been a while, but I'm back. For my returning subscribers, thank you so much for your support. For my new subscribers, I'm Sam G, your personal finance guy. In today's video, I want to talk a little bit about some tips to help you get cheap mortgage rates. A lot of my friends in my circle are now looking at homes, so it gave me the idea that why don't I just make a short video on some of the things to consider from improving your credit score to your down payment and a whole bunch of other stuff that contributes certainly. So the whole point of this video is to just kind of give you some of the basic facts so you can get started on your research. If you're looking for a home, if you're looking for a townhouse, what have you, if you're just okay with just renting an apartment, or you're even looking for a condo to purchase. So I hope you enjoyed this video. If you do, please leave a like, comment. Please definitely subscribe so when I do make these videos, you get updates. It's very important and it helps support the channel. So I hope you guys enjoyed this video, and let's get right to it. So one of the first important things that you need to do is improve your credit score, right? So lenders typically use a credit score as a way to measure your ability to handle debt and also to be able to pay back your debts, right? So you have to be able to look through your credit reporting to see if there are any errors, because higher credit scores often result in lower interest rates. I'm talking specifically with your mortgage debt, result in lower interest rate. And even when you're getting a car, if you have a higher credit score and you're financing a car, you will typically get a lower interest rate, which maybe not be the same across the board, might depend, but typically that is the case, right? So make sure that you improve your credit score. If you have any debts in collections, you better make sure that you're getting rid of that. You need to clear that off your record. If you're getting too many hard inquiries at once, you have to make sure that you reduce the number of them, especially like 9 to 12 months leading up to your purchase of the home or leading up to the time that you're getting the mortgage loan. You have to make sure that you don't have too much activity that will impact your credit score. So if you have any debts, credit card debt, any loan debt, student loan debt that you're not making payments on or that is in collections, you have to make sure that you clear those and then make sure that you're keeping up with all your payments. That way your credit gets better, and once your credit is in a better position, it puts you in an overall better position to be able to get a cheap mortgage interest rate. The next important thing is for you to save for a larger down payment. So a larger down payment is often assigned to lenders that you have a bit of financial stability and you're not too much of a risk, right? So let's say you wanted to buy a house for maybe $300,000, right? And you had a down payment of $5,000. If you can add maybe 10,000 more to it or 20 more thousand to it, it puts you in a better position to where sometimes you don't really have to pay the PMI fee that they add for the lower down payments, and you need to do more research on that actually. So, and that's one important thing that I will advise anyone that wants to buy a house: do your research before you even think about buying a house. Yeah, you can save for it while you're doing your research, but make sure that you know the ins and outs, the fees, the one-time fees that come with it, the recurring fees that come. Make sure that you're putting all of that in context before you get the property, so that you're not, left back holding and now you don't have the money to maintain the property, but you have it and now you're forced to sell it at a loss or whatever have you. So make sure that one, you're researching, and also that you're saving for a larger down payment. The research part was just a tangent, but the important point here is for you to save for a larger down payment. And also, leading into my previous point about researching, you have to shop around for mortgage interest rates so you can compare them, right? Don't just accept the first one you receive. Obviously there'll be a lot out there, so you have to go from bank to bank or lender to lender to see what rates they're offering, what perks or incentives they have, and what the fine print of their agreement and their contract actually is. Exactly, read the fine print. That is exactly what you need to do, right? So you have to make sure that you're shopping around, comparing contracts, comparing numbers and everything, so that you're making sure that you're getting the best rate possible at the time. And also, you can research the different kinds of mortgage options that are out there, example fixed rate mortgages as well as the adjusted rate mortgages. So you can check those out, you can research them to see which one best suits you. Some people would work better with fixed rate, some people will work better with adjusted rate. For example, if you have a student loan, right, whether it's through, let's say you have it through Sallie Mae, they give you the option, say, hey, you want a fixed rate loan, or do you want a variable interest rate loan, right? Variable interest rate just goes up and down, and then the fixed one, you just lock in at a certain rate. Typically you will pay more, but evidence has shown that over the course of the years, sometimes the variable interest rate loans go higher than the interest loan that are on the fixed rate, which makes sense, because people will get fixed rate because of the likelihood that it may go up in the future if they will with the variable interest rate. So some people like variable interest rate better, or in the mortgage case, adjustable rate mortgage, and some people like the fixed rate mortgage better. So it's just really up to you what your financial needs are and what your financial maintenance needs are after you get the property. See which one works best for you, and then you can go from there. But the important part in all of this is to make sure that you're researching all these things so that you're getting the best possible deal. Next point is that you maintain stable employment, right? So having a stable track record of having employment helps lenders to see that you have a track record, one, and also two, it increases your likelihood of credit worthiness and the likelihood that you're stable enough to be able to pay back everything that you're borrowing. Which is not to say that you can't change jobs. You can definitely change jobs if you need to after 6 months, a year, if you feel like you need to grow somewhere and grow. But you just have to be able to have jobs back to back. If you have any gaps, maybe you're doing some freelance work that is kind of filling up for the gaps there. So as long as you have a stable employment track record, that also helps you, plays a role in helping you make sure that you get lower interest rates. So the next thing you want to consider is the length of the loan that you're getting, right? We have some 15 years, we have some 30 years. So, and we have the short-term ones. The short-term ones have lower interest rates, but they have higher payments, right? So you consider that in line with your financial goals, whatever your budgeting goals are. Some people like to save while they're paying for stuff, so that means that they can't make too much of higher payments, so they go with the long-term loan, the 30-year one. And some people have the money and they have the capital to keep up with the property after they get it, and they want to get it over with as soon as possible. So they enroll in the 15-year program and then pay off the loan in 15 years. It has lower interest rates, but it has higher payments, but they have the money to be able to kind of take care of that, so they do that. So consider the length of the loan and put all of that in context as well for the property. So, and a big part of this is to pay attention to the fees that are listed on the schedule, right? So sometimes people are so focused on the interest rates that they don't see all these other fees that come with getting the loan, the origination cost, the closing cost, as well as there are many other points. Sometimes I read through some of these and I'm like, I feel like they're just making up some of the fees as you go, because they know you won't push back. But I mean, I'm just kidding, but those are fees that you actually have to pay. So you have to make sure you put all that in context, because that can also impact the amount of the loan that you get. You may be getting a $500,000 loan with closing costs $50,000 or whatever have you. So the money that you're actually getting towards the house is not actually $500,000. They're actually taking money out, fees out, and then giving a balance to you, and you're paying off the original loan that you got, plus interest rate, right? I've seen situations where people got a $360,000 loan and paid back $630,000 at the maturity of the term. So it's crazy numbers out here. So again, before you sign anything, please do yourself a great favor and go over these things so you're not caught lacking. So keep that in mind, and that will really help you in the long term. Once you've gotten your loan, once you have your mortgage set, you have your property set, everything, you can then consider enrolling into auto pay. Sometimes there are incentives where they give you a slight discount on the balance you're paying off each month, and that's an incentive for you to join in. But you can just automate your payments, given that you have the money in the bank account to be debited each month. You can automate it so you don't miss a payment. But if that's not the case for you, obviously you can make sure that you're going through doing your due diligence each month and then paying it off. So keep that in mind. So after you've done all these things that I've mentioned, you've done your research, you've improved your credit score, you've saved for a large down payment. Once you're able to do all of that stuff, the next thing you can do is consult a mortgage broker for information on anything that you may be missing, anything that you don't understand. They'll be more than willing to break it down for you. But the important thing, do your research before you get to that point. Don't just show up blindly and then just sign anything or just take whatever they tell you is law. Make sure that you're researching, you're going back, you're examining, you're cross-examining what they're telling you. Because again, they have incentive to do what they're doing because they're making money off it. You're the one that's paying for it for the next 15 to 30 years. So make sure that you're aligning your values and your goals to make sure that in those 15 to 30 years, you don't screw yourself over. So keep that in mind, please. Please keep that in mind. I've seen too many people screwed over certain loan agreements, mortgage agreements that they didn't really understand but just signed off on anyway. And that has really come back to hurt them. in the long run. So keep that in mind. Always remember that the mortgage you qualify for always depends on your financial situation, the overall climate of the economy, and a bunch of other factors. So just do your part in what you can control, the little that you can, to make sure you do it. And also importantly, make sure you're always researching, finding new information on that, especially on the properties, especially when you get a property. And I'll do another video on this, like what to do when you get your first property. There's a bunch of stuff you need to inspect: the heating system, the plumbing system, then inspect the foundation. There's a whole bunch of inspections you need to do. So I'll make more videos as we go on, and I have more finance videos coming in with personal finance, index funds. So I have a bunch of content. So if you enjoy this content, please definitely leave a like, comment. Also, tell me your opinions in the comment section. Please subscribe as well if you enjoy the content. But I think that is it for today's video. I don't have any more points. This is just like a high-level overview of some of the things you should be considering as you're saving for your house, as you're considering purchasing a house. There's a bunch of factors you need to put into context. So thank you guys so much for tuning in, and I will see you guys in the next video. Take care.